Hey guys and girls, welcome to this week's Tuesday night live. Thanks a lot for tuning in as everyone is hopping online. Just wait for some people to come in, smash up the likes, drop us a comment, say hi, make sure that everything's working, and we will get straight into tonight's topics of conversation. So today I have a returning guest here, which is very, very good to have you on board, Gemma.
Thank you.
Maybe if you want to give everyone a bit of a background of who you are and what you do and why you're here on the Tuesday Night Live and why everyone should listen to you.
Okay, that's a lot. Okay.
Yeah.
So I'm Gemma. I'm from the investor relations team. I help people with their goals and dreams. That sounds like a nice way to put it.
Mhm.
But I would say we're kind of like the gap between the client and you. You can't obviously spread yourself amongst thousands of people, so we bridge the gap. Why should people listen to me? I've got a cool accent.
You got a cool accent. You have gone from when I met you, knowing nothing about property, right? And then you're a property expert. You're kicking ass with your goals. You just bought another property today. You have helped hundreds of people, get nice large portfolios. You've got there's less than 20,000 people in the country with 6 or more properties in their portfolio, and you've been a part of probably, I don't know, hundreds of those portfolios.
That's pretty cool.
Yeah?
That's actually pretty cool.
So you're a part of the elite 0.001% of Australia personally now, from having no property experience, and then learning all about it, and building a portfolio, and then you help other people do that.
Yes. Actually, and it's funny, I'm not sure which one I take most joy out of. That sounds like a really sappy thing to say, but it's really cool that even when we can't do anything, that you can see cool things happening, you can be a part of other things at the same time. So it kind of feeds the bug.
I had one of our investors come in yesterday into the office, and his portfolio, he didn't realise how great he was, but he built a portfolio like over the last 10 years, and I think he's got like $5 million in equity just sitting there, and we can get out like 600 grand of equity, and I've got a strategy for him to retire this year actually. And he's like, oh really, you think I should do that? I was like, mate, you fucking did it so many times over, right? And he's like, but who else has done it, right? And I was telling him about your client. They've got like 27 properties in a year and all those sort of things, and he was like, okay, wow, cool, let's make that happen. And I was like, I'm fucking more excited for you. Like, I felt like, shaking him, because I'm like, you need to,
But people don't realise you can.
Exactly. And seeing the growth of those people, which is really cool. So
the penny drop moment's the best.
Yeah.
And they go, oh, okay, so we can do that. Yes, that's what we do.
I feel like I've seen that happen with you from when I first met you, like so many times. It's like I've seen you take your first steps, seen you do so many cool things. It's like it's great.
Like a parent.
You're like a parent. Like I've seen you grow and like kick ass with what you're doing. So yeah.
Oh, it's good. It's been a journey.
How long is it? Like it's we won't go into intimate parts of your portfolio and stuff, but I know that you're kicking an ass and you're pushing yourself way out of your comfort zone. Like,
way out of my comfort zone.
How many properties you bought this year? If you have to guess, roughly.
I think it's 4 this year.
You just bought one today, don't you?
Today, if we include today's.
Is that 4 or 5 today?
That's 4 today.
4, okay.
For this year, and then 2 from last year.
There we go. 6 properties in the 0.001% of the club.
Yay.
Yeah, you just made it. It's great. And you got shitloads of equity in that one you did today.
Yes, and I should have at least some in the one that's not settled yet.
Yeah.
So I'm collecting it.
For number 7 and 8. And that's what we do.
I need to survive this one first.
Literally, last time you were on here, what was it, like 8 weeks ago or something? 2 months ago?
Yes.
And I said, I'll get you 2 more properties. And here you are today with 2 more properties in your portfolio. There we go.
So I'm the show pony.
Look, it's I see there's comments coming through, and let's have
My fans.
There we go. You've got Amber saying hi. Hi, Amber. Joel. There you go. Joel's got his almost settled his fifth property.
Oh,
and Danielle. Hey, everyone. And thanks for tuning in. So let's get into tonight's article. So I'm going to run through maybe a half dozen news articles as per usual, and then I'm going to hand it over to Gemma to talk tonight. So here is an article from news.com. A lot of these are they're just different various news sites as per always. And let's go and read through this, because a lot of news out there is, people. I had a meeting. I had a strategy session with one of our investors this summer. You know, the one that booked in at 4:00. Lady, and she was telling me certain things, and I asked her, like, why do you believe that? And she's like, oh, just because that we're in a bubble. And I'm like, but why are we in a bubble? Oh, house prices are falling. It's like, where are they falling, right? And it's like a lot of people get caught up in these news headlines, and I'd like to debunk them. And this one here.
Do you think it's funny that people have these ideas or these opinions, but they can't really tell you where it's coming from?
Exactly.
It's just all around. It's just a fact. It's funny. Where do you get the fact from?
It's dig deeper, and that's why I like to dig deep into these news articles. So this one here is from news.com. It says, inside Australia's $3.8 trillion property market forecasting error. Right? And this is really funny, right? Because a lot of people are fearful now of interest rates and all that sort of stuff. A grave forecasting error in 2020 saw Australia's property market go haywire. Now the same thing could be about to happen all over again. Inflation is running hot, rents are on the rise, and talk of recession in Australia around the world is reaching fever pitch. The property market has softened from its highs of 2021 and is tipped to fall further in the months ahead. Well, it depends where they say tip to fall further in months ahead, because you know as well as I know that we're losing deals every day of the week from people. People are paying
and
more.
They want more for it.
They want more, right? They want more, and the markets are still very hot. Everyone's reading this stuff, going, "Oh, the sky's falling." Anyway, fear and uncertainty is high, but with the huge forecasting errors from banks and Reserve Bank of Australia over the last couple of years, many are questioning how accurate these forecasts actually are. At the start of the I can't say that word, pandemic in 2020, forecasters were predicting a 20% drop in property values all around Australia based on the $7.71 trillion property market. This would have equated to a drop in value of Australian property over 1.54 trillion. But instead, through to the end of 2021, the value of property actually increased to 9.95 trillion. Reflecting a total increase of property value over 2.24 trillion, this reflects a forecasting error of 3.78 trillion. How did they get it so wrong, right? Everyone expected, and you would have thought, right, you're being locked in your house, everyone's losing their jobs, the lines around Centrelink, all these sorts of things. Why did the property market get so high? And it was because they manipulated a few things, and that's something no one saw. Everyone was like, oh, prices are going to fall, prices are going to crash. That was a crazy time.
Back then, I remember talking to people that was like, oh, I can't be buying now. It's really bad. I can't be buying now. And at the time, I'll be honest, I almost, because it was before my penny dropped, I was like, oh, maybe it is. I didn't know who you were. I didn't care who you were. I was like, Nathan, I don't care what Nathan's saying. Everybody else is saying it's a bad time to buy.
Yeah.
Now looking back, I'm like, oh.
Yeah.
We kind of missed a big opportunity there because...
Well, we didn't. A lot of people took it off.
Yeah, sorry, a lot of our investors did, but I'm talking, like, for me and the people I was speaking to, we kind of went off and like, okay, maybe it is that time. Why don't you wait?
But you were setting yourself up.
Yeah.
You're getting yourself ready. You wasn't ready. Like, you've got people that you've been talking to for a few years now, and they may have been able to do nothing 2 years ago, and they're now in a position to do stuff, and they're pulling the trigger and making action happen.
And that was sad. The ones that wanted to but couldn't, but the ones that could and didn't. Yeah.
But that's the way it is. That's why we've got markets, and that's where people make their wealth, which is cool. The state of the market today, the property market around the country has softened. The national house price is down an average of 4.4% from the top of the market in 2021. I know markets that have gone up 20, 30% this year alone. It's crazy. But they're saying that it's falling. So believe whatever you want to believe. But anyway, the banks are expecting other further declines, with ANZ recently releasing a report forecasting a further 20% decline in property prices before the markets recover. If this happens, it would make the largest downturn in record of Australian history. These current and potential declines largely driven by interest rates increasing at a record pace of 2.25% over just 5 months to combat the current inflation crisis. These interest rate increases have added $733, interesting number there, choice of number, the monthly repayments, the average mortgage of $622,000. The experts are predicting rates will fall further over the months ahead, adding that the pain of mortgage holders putting further pressure on the property market. So if we think about it, right, these people, when I was talking to my client that you booked me in for the call today, I said, you're scared of a 150 grand loan on your property, right? Your rent has gone up by $50 and you put it up another $40, right? You're going to make $90 in the next 12 months. Imagine the poor person that's sitting on their $1 million mortgage and it's gone up by 25 grand a year. Just overnight, they weren't expecting it. Plus the cost of food, the cost of everything. I'm like, there's going to be the stimulus packages, and it's seeing beyond what's in front of us, which I think a lot of people get caught up on.
It's scary. I get that, and even I'm like, okay, well, I'll bring my instant coffee into the office and not buy 2 coffees a day.
Yeah.
But that kind of hit me when I'm looking at my rentals and I'm like, okay, well, I can put them up in 6 months, even 12, whatever it is. I can put them up.
Yeah.
And then I was like, people don't have that option to. And it sounds really like thick to say it and very obvious, but at the time I didn't even think about it. I'm like, oh, okay, now if you only have your principal place, you haven't got anything to increase to support the increase.
Yeah.
So
it's a matter of having assets, which is but imagine if we see our rents go up by $100 each, right? So you got 6 properties now, and you'll have 8 by Christmas. No, just adding you the extra 2 already. I haven't even bought this one, but anyway, let's say 6 properties go up $100 a week rent, and you're like, okay, cool. Now they're just neutral cash flow because of interest rates have gone up.
Mm-hmm.
But imagine when the interest rates come down by 225 basis points, and you're now 30 grand a year better off, right? That's literally how people could retire. We were just having a conversation with one of our colleagues in the office before we hopped online, right? Mm-hmm. That person had like $3 million worth of debt. So that person's interest rate would have gone up by $60K a year now. Boo-hoo, right? I say it so harshly, right? But I remember when it came down, right? And that person's interest rate, they saved 90 grand a year, right?
So they're ahead 30.
Still ahead 30, right? Because they held the assets. And then their rents would have gone up probably 100 grand a year, right? So they saved 90, they earn an extra 100 to 190. Now it's gone up by 60. Who gives a shit?
Will the rents come down as the interest rates? If the interest rates were to plummet?
Yeah, I don't see it happening.
No. The interest rates will stay.
Yeah, rents will generally stay. Yeah. If the interest rates plummet, then we go into another boom, and the property will double anyway. So you're going to win whatever way, right?
Yeah.
What drives property prices? This one will be a whizzer.
Which properties are you talking about? Have I missed the point here?
Well, whatever they're talking about.
It just seems like
the ones that they say. The ones that they say, right? The ones that they say. So they're using statistics, right?
But it's saying property market forecast. Which market?
The Australian property market, the whole market.
Yeah, but can you talk about it as the whole market, or wouldn't you look at
it as individual? It doesn't go up at once. There's markets that have crashed from 10 years ago. There's properties that we can buy today that are cheaper than they were 10 years ago. But they group them together and say, oh, it's because of this or it's because of that. They can
I haven't missed something. I thought I was missing something.
No.
Surely there's different markets.
No. So what drives the property prices? There are heaps of factors that drive property prices. Supply and demand is the foundation. Well, they say it's supply and demand. Well, they've just printed more money than ever before. They've printed more houses than ever before. And we see what happens when they do a big money printing exercise. We see all the builders go bankrupt as well. That's a totally different story, because imagine now that we've got new migrants coming in the country, they're talking 200,000 people per year, right? 200,000 migrants, potentially 400,000 migrants per year. And now we've got no builders left to build houses, and people can't afford to build houses anymore. So what's it going to do to the existing property? It's going to mean more people, supply and demand, which will be even more fun. Whichever way they move, they're fucked, right? And I think that's checkmate. These are impacted by what's going on in the economy: wage growth, interest rate, unemployment, household savings, inflation, and the list goes on. I don't see on there about how the RBA just decides to print trillions and trillions of dollars worth of debt, and it gets printed from oblivion, right?
They've left that
it's never in there. It's never in there. It's like but no one questions it, right? The average punter doesn't question it. Our community does because they're smart, but other people don't question it. It's just conveniently left off, right? It's conveniently
because we fucked it.
Because we fucked it. Like our rulers, our controllers, not even the government, they might have like a squabble, like, oh, it's Liberal and the Labor and the negative gearing and these two parties. And it's like, it's all bullshit. It's all a show. It's the printing of the money. If they didn't print all this money, there would never have existed the money, which people wouldn't have the money to go buy the properties for those obscene prices to start off with. But through time, the single factor has its strong links to movement in property prices is in sentiment. It's in sentiment. It's the mindset, right? It might seem a bit odd, but the biggest thing that drives what's going on in Australia's $6 trillion housing market is our feelings. Well, let's just go back to 2020. What they're saying in this article, right? It actually sounds very bipolar in the article itself, right? Because they're saying that inside the Australia's forecasting error, right? And it says here it's the settlement that makes house prices go up. So you're telling me that we had the best settlement in the start of 2020? People were locked in their house, in their own prison. They were fearful of their jobs. They were fearful of their businesses. They had no income. All these things. You tell me that's what made the prices go up. That's what this is saying. The settlement drives the housing market and our feelings. Everybody's feelings were fucked, right? They're absolutely shit out of luck. The only thing that was going was the amount of currency that they printed. They printed trillions and trillions of dollars dead. Everyone got hooked on this cheap credit, and that's what caused the market to go up. But I don't see anything in here. And here's the thing. Our feelings can change pretty quickly. No, they don't. No, they don't. The currency control and the manipulation. That's why we're seeing the shares fall. We're seeing fucking crypto fall. We're seeing businesses go bankrupt. The amount of businesses that have gone bust this year up like hundreds of percent. Like the amount of businesses that have gone broke is so crazy. You know, the feelings can change quickly. At the start of Corona, many Aussies were fearful of how things were going to play out. In between panic buying toilet paper and hand sanitizer, we occupied ourselves by imagining how the world might end, and fear levels were insanely high. But the world didn't end and the property market didn't crash. In fact, we went into the complete opposite direction, with property prices rising at the fastest pace of record to the end of 2021. Forecasts are obviously wrong, right? But why did it happen?
Often wrong.
Often wrong. The forecast. Why are you telling us that? It's literally it says that the forecasters are often wrong. Like, why? You're exactly right. Why are we listening to them? But everyone's caught up in this trance of fear porn and shit that they say.
I don't read this stuff ever, right? So
I don't either. I would watch it comical. It's like a comic. It's fucking Kardashian shit.
We all have paper. I don't understand how they can be so blatant with it and people still... And I don't mean that disrespectfully to anybody, because I know in COVID, even people that understood it felt like shit. Do you remember when I texted you, like, I just want to go to the beach, Nathan?
Go to the fucking beach. I'll send you pictures from the beach. Just go.
But even people that understood it all, it was really fucking hard to be happy at that time. And now they're saying outright, we pretty much always get it wrong.
Yeah. Over the years, I've heard a lot of predictions about the mythical property market crash in Australia, but through all the economic cycles over the last few decades, it just hasn't happened. Why? Because the system will implode. Everyone will go bankrupt. The banks will go bankrupt. The only way through is the central banks to go and print more money and rob everybody's savings. So, yeah. And then we go on to read.
It just didn't happen. Oh, well.
Oh, well. How to buy smart and make money. Here's the thing. Properties that were good properties 12 months ago while the property market was running hot are still good properties. Good properties were good value then. Good properties will be good value on the other side of this current market turbulence. And in my opinion, good properties are good value today. Maybe the forecasters will be right and the property market will soften further over the months ahead before it rebounds. If you buy a property today, it's possible that a year from now that you look back and see that you could have picked it up for a little cheaper if you bought it a couple of months sooner or a couple of months later. But maybe you're wrong again, and maybe we'll miss the boat and the opportunity to make your smart property move. Either way, in my opinion, it's highly unlikely that 10 years ago you'll be regretting your purchase, because then the current property market wobbles will be a distant memory. I see nothing at all. It's like, oh, maybe in 12 months it'll go up. Maybe it'll crash. The market is going to crash. Based on what? I see no fundamental evidence from any of these fucking idiots out there.
What's this guy's name?
I don't know. Let's not go into too much detail about who they are and call them out, because I actually do know a lot of people from these publications. But you need to make sure you're ready for interest rate rises. Well, no shit. You should have bought it below market value, so if it drops, then who gives a fuck? You can hold through it. You want to make sure that you're buying it with positive cash flow, because then if it goes up, well, then you're still going to be making money. You need to make sure you buy it with upside capital growth. I wonder where I've heard that beforehand. Where would we have heard that, Gemma? Oh. You need to be prepared for economic uncertainty. You need to be confident the property you buy is one that will perform well into the future. It's critical you're able to afford a property and live the lifestyle you want in the short term, so you're able to continue holding your property until you get the gains you're after. This means your planning needs to be rock solid. It doesn't sound like you guys that are writing this stuff planning shit. All the people reading this, it sounds like all fluffy. I'm actually just getting annoyed by reading it, right? It's just so stupid. Like, it's just dumb. I've had enough of reading that. Let's get on to the next article.
I'm going to place mine neatly to the side.
Yeah. Gemma stapled these today for me, and she's like, oh, you lose pages. I'm like, no, I like this throwing.
We should do a survey. How many times have we stopped and waited for Nathan to find his place in his paper?
How many times do they find it fun, me throwing it away? This one here says, RBA boss Philip Lowe says Australia is faced with two difficult positions. This one's going to be a fun one. Reserve boss, difficult choice regarding inflation and interest rates. The Reserve Bank governor says Australia is faced with two difficult choices when it comes to interest rates. Philip Lowe told the Parliamentary Economics Committee that the central bank had to choose between some pay now and the real wages, hopefully. So let's go back 2 seconds, right? The RBA governor told a Parliamentary Economics Committee that the central bank had to choose. So the central bank is saying here that the central bank is the one that chooses the decisions. They choose our money, right? So if you were a kid being chosen the food for you, then you would be the fucking little baby. And the ruling power being the parent saying, this is what you're going to eat tonight. You're going to eat the greens, right? So in this instance, it's clearly saying from the Philip Lowe, the RBA governor, that the central bank had to choose on behalf of the country, meaning that it's overpowering the country because it's the ruler of the country, right? And a lot of people go, fucking property prices, they're going to fall down because, whatever else. And it's like, fuck, like, we need to look deeper, right? That's why I bring joy. That's why I get a kick out of knowing that I can share and make people awake, right? That's the biggest thing that's been cool. But anyway, the choice that they have to make on your behalf, right, is some pay now until real wages hopefully start rising, right? Hopefully, it's actually in the brackets like that. Start rising, and the risk of not doing anything to counter inflation. So all they are doing, he's admitting here that they have to do something to show that they are doing something for inflation, right?
But they're saying no matter what they do, they're fucked.
Saying whichever way they're fucked. Do you want to be, how do you want to die? Do you want to get shot or do you want to get stabbed, right? Do you want to fucking...
I feel like it's like a match or
pour some petrol on you, right? And that's all they're doing. They poured petrol on the economy. They set it on fire with inflation. And then they're going, we'll just, Anyway, with inflation running at a 30-year high of 6.1%, nothing has gone up by 6.1% this year. Everything's gone up more than 6.1%. Your fucking McDonald's, your food, your mortgage.
Pot pie, double. Literally
everything.
Double.
Everything's doubled, right? The food at the pub, wherever you're going, has gone up. So nothing's gone up by 6.1%. It's all a lie.
I feel like an old married couple reading the newspaper, like same newspaper, but just
It's like the choose your own adventure when you're a kid at school, and it's like the choose your own adventure, like it's a different. I'm reading a different story. I can see it like Neo in the Matrix, right? It had been set to a historic low of 10 basis points in November 2020 in a bid to ease the economic crunch of the illness. You did the cough at the right time.
Sorry.
Associated lockdowns and job losses. Dr. Lowe, he's called Doctor now, Dr. Lowe, right, has been put in the hot seat for a hearing on Friday, examining the central bank's 5-month streak of rapid rate hikes as part of its mission to return inflation between 2 and 3%. So now he's happy to go to the hot seat, put himself down to the commons in the parliament, to the peasants, and have those peasant rulers go, okay, now question, put us in the hot seat. So he's going to take the blame here and shift it to the government now and say it's their fault. They had control over it. Yeah? Anyway, He has attracted criticism over the central bank's decision to hike interest rates at such a fast pace, particularly given he indicated last year, he actually didn't indicate, he said that they would remain low until 2024 and they would not move upwards. He said on Friday he never promised or committed that time frame, but he accepted people understood his conditional statements as such. Dr. Lowe said he knew 2022 had been very difficult for many Australians, particularly those without buffers. No, it's not just Australia. Why have we got this guy in Australia talking about it? Why haven't we got every single central bank around the world having this conversation, right? Because we've got the same news in every single newspaper in every single country around the world. It's like they get given a fucking template and they change Australia with Canada, UK, US, whatever, change the name to whoever the fucking puppet is in their country, and that's what it is. If we manage this well as a country, we should all come together with a common goal. We can look forward to prosperity again. We have prosperity. It's called inflation. It's called money printing. They've made prosperity. Everybody's been prosperous, right? It's time now that the accounting sits there and has a reconciliation of the daily's takings, right? It's just like that, like an FBOS machine. If we say, well, it's all too hard, we don't want to cause any pain for anyone, we'll put that at risk. Dr. Lowe said an alternative to lifting the interest rates would be allowing higher inflation to become entrenched, which would damage the country's economic prospects. So just get that into perspective, right? The alternative to lifting interest rates and causing a recession/depression would be allowing inflation to become entrenched. So we've got one of two options. One is we go into a really painful deflationary cycle, depression, or we have inflation that runs away, which is called hyperinflation. And people used to say, hyperinflation, Nathan, get off those drugs that you're taking because that's never going to happen. Well, here we are faced with this in the mainstream media today, and it's very common knowledge. There's only one of two things that's going to happen. We're going to have a massive recession or we're going to have massive inflation. Take your pill. Do you want to get shot or do you want to get stabbed? How do you want to get killed in this? There's only one way that the whole Western world survives, and that's with inflation, right? They can kill the currency, but they can't go back and kill everything that was created upon, right? Because money is debt. It was only ever made into existence due to the fact it was a loan. And he said that there's only an alternative. The alternative to lifting interest rates would be allowing higher inflation. So when he realizes that raising the interest rates isn't going to work and inflation is going to run away, but it's going to cause certain segments that are very crucial to our economy, like our business markets and everything like that, to die, well, then they're going to have to reverse this monetary policy and it's going to create even more inflation. And that's where all our debt gets wiped out. That's where all our assets get inflated away. He said inflation should drop down towards 4% by the end of 2023, after peaking at close to 8% later this year. So they're saying it's going to get a lot worse, right? Yeah.
Close to, though, so
Close to.
It's not 8 and above, so at least there's some reprieve on its way.
Let's go buy a cheeseburger or a Big Mac now and see what the price is today to what it was 2 years ago. It's just, yeah. The longer it stays above 3%, the more difficult things are going to become, he said. As that happens, we're going to have higher interest rates and a recession, which is damaging. Of course, no shit. They've actually caused irreparable damage right now. The only way to get through this from their rate hikes is to drop the rates. It's the only thing that they can do to save the economy, which they are going to be forced to, and it will happen in the next 12 months. My view. No financial advice, anyone, just a crazy guy on the internet talking random things. We've got two different kinds of positions at the moment. Some paying right now, hopefully real wage start rising again next year against the risk of doing anything and just sitting on our hands and having inflation stay higher. That sounds really technical, right? It sounds really like sometimes people will sit here, Nathan, what you say sounds very rough, very harsh. You're not an expert. You haven't been and got a Harvard uni degree. You were not the governor. You were not a doctor like Dr. Philip Lowe, right? But he's okay to say... he's okay to sit here and say some pay now, hopefully real wages start rising again against the risk of not doing anything, and our hands are sitting on our hands and, having inflation stay a bit high. You can just picture it, right? His little goofy fucking head, look at him.
What's he a doctor in? Do we know?
I don't fucking know.
What does it mean by real wages?
Well, real wages going up, not like statistical wages, not like with inflation. So you can have wages go up with inflation. So if inflation goes up 3%, wages go up 3%, it really neutralizes it. But if the real wages go up, if there's real growth to the wages, that's...
Right, okay.
Yeah. Interest rates weren't set in stone longer term, but they're likely to hover around a more normal level once inflation has settled down. So there we go. Dr. Lowe said the interest rates weren't set in stone for the longer term, but they were likely to hover around a more normal level once inflation has settled down. What's the normal level? Let's go and pull out charts of interest rates for the last 30 or 40 years. Interest rates have been declining, right? So if they go to a normal level, they're going to be declining on that rate of graph.
Yep.
So they're going to go back to zero. They're going to go back to negative, right? If they're going to go back to normal, they're going to go back to that same trajectory. Is that right?
They'll be returning.
Where's normal?
Yeah.
Right? I think we'll cycle somewhere between a number between 2.5 and 3.5%. It's hard to be specific and lend up, and it will cycle up and down with the economic cycle. Apparently, I reckon that they're going to say climate or Russia or Putin or something that's not our problem. China, an earthquake, a tsunami in Taiwan, which is very, questionable anyway. Cause something to happen of a recession, and we're going to have to drop the interest rates to a very crazy way. Anyway, we can go on all day about that, but you can see that we're faced with a position which is, how do you want to die and take your poison? So, rising rates put a brake on industrial property values. How many times would you get someone calling you throughout the week saying, I might go buy a commercial property? Is that a very common thing?
Not all. Some people that do, some people do, but it's not a weekly occurrence thing.
Yeah. Let's read this. Rising rates put a brake on the industrial property industry, industrial property values. Asset values in the country's booming industrial sector have reached critical juncture, poised between the uplift to be reaped from rental growth and the downward pressure imposed as yield caps creep higher. A decade of compression, yields began edging up with the second quarter response to the high cost of debt. Yields on prime industrial assets have risen 25 basis points in Melbourne and Perth by 20 points in Brisbane. They were still holding firm in Sydney over the second quarter, but likely to be tested some more thoroughly over the remainder of this year as the weight of evidence accumulates from transactions. The pace of growth has undoubtedly slowed, but there still has to be growth in the first half of the year, notwithstanding what has gone on in credit markets. To date, the acceleration of rental growth has carried the day even through the compression of yields has stopped. We're starting to see yields move out, but it's too early to see if we have a material impact on valuations. Valuation data continues to show capital growth, so that suggests rental growth is still in the dominant factor. Lack of supply coupled with sharply rising construction costs have propelled industrial rents higher. In Melbourne, average prime rents rose another 4% over the second quarter. Yada, yada, yada. Despite the healthy underpinnings for logistical real estate, the investment front, a sharp uplift in bond yields and swap rates has directly impacted the funding cost and hedging costs for offshore investors. That has played through to the deal flow as investors become more cautious. Result that as transactions fell 20% quarter on quarter to 3.3 billion in the second quarter. So if we look at what's happening out there in the retail space, in the business space, I said the most important thing to look at is businesses, because as we start seeing businesses get themselves into trouble, we start seeing a big shake-up. So if we're seeing, companies fail, I read out like 2 weeks ago or something, articles about in the media about the businesses that can't afford to survive, coffee shops, and the cost of inflation, the cost of wages going up, the cost of all this. They can't afford their rents. What's going to happen to them? They're going to go broke. Property's going to sit there vacant. This one here was sent through. I saw one of our viewers online earlier. She sent this through to me. Aussie companies collapsing rises 129% since January. The extraordinary impact of economic challenges affecting the country is ramping up as the pain threshold grows, but the worst is yet to come. The rising cost of living, surging interest rates, labour shortages have battered the Australian economy, resulting in the company collapses jumping by a whopping 129% since January. It is a disturbing trend that has seen thousands of businesses fail, with a new report from Credit Watch showing that companies going to administration were up 58% year on year, with hospitality, recreation and education training sectors most at risk. Payment defaults are surging as well, with 53% year on year, with Credit Watch report found. Credit Watch said raising payment defaults was a disturbing trend. Multiple challenges confronting many businesses, whether they will be rising inflation and interest rates, labour shortages, or the ongoing impacts of the pandemic, are all conspiring to make it much tougher to pay invoices. So if you look at any billing company, it doesn't matter what sort of company it is, whether it be, you know, a phone company or like Telstra, or whether it be an electricity company, a water company, a council rate, they're using debt collection techniques because no one's paying their bills on time. No one's paying their bills, right? And I know from our upper levels of management, like people that have come into our business to work for us, they're like, oh, you know, place I used to work for, this is happening, that's happening, whatever. It's a very common trend out there, and people are wanting to get paid quicker. They want shorter terms of bill payment. So instead of 30 days, it's 14 days or 7 days or whatever. And it's crippling people because they don't have enough cash flow going through their business. And a lot of businesses will not survive due to this. And they're going to have to do something to fix that. Otherwise, we're going to have no jobs. It's going to be the worst thing ever out there for people. And they're going to have to turn this around.
What effect do you think closing the borders had on that? Because from a lot of my travels, I saw that a lot of companies relied heavily on backpackers and international travellers for work. Do you think closing the borders would have had an effect on closing businesses down and struggling?
No, because they've had printing. Like, we've had everything going great, right? Businesses have been booming. There's not enough staff out there because they're trying to put on more staff. You know, we're trying to put more staff on. We're finding it difficult. Some people have left certain industries because they don't they don't want to go and get the injection, right? So a lot of people, that's why there's a shortage of teachers. There's still the same amount of schools, still the same amount of students, still the same amount of everything that there was a couple of years ago. But why is there a shortage of teachers? Because the teachers, they might have lost 10% of them or 5% of them that didn't want to take the dues. So those people are now, we know people that have gone and changed their professions. They could have been in the medical field and then they've gone and got a job somewhere else due to the fact that, you know, they didn't want to go and do certain things. So it's I don't see any issue on that front. We've still got the same amount of people out there. It's just due to the fact that apparently, Russia's caused your coffee beans to go up, and China caused your car value to go up, and all these sorts of things that are occurring. But fuel. Imagine what happens at the end of this month when the fuel excise reduction, where they have the discount of 22% on the tax. So petrol will go up by 22% at the end of this month. So I don't see in there 8% inflation index. I don't see petrol recorded there at it's gone up by 50% this year, right? We're not seeing that. Businesses going broke. This one here, I find it fun, right? This next one is fun. This might sound bad, but for my personal excitement, I find this fun. I employ hundreds of people nationally in all different businesses. Finding staff and all that sort of stuff is a difficult thing. Where are we here? Early signs of economic tipping point in unemployment. Right? So imagine when there's all the people unemployed, imagine how many cool recruits we're going to get in here. We're going to get great. We're going to be able to grow. We'll need more offices. We'll, fill up all those vacant offices. The nation's runaway jobs market is showing early signs of reaching critical tipping point. Oh, it's a tipping point it's called here, right? This is from Sydney Morning Herald. Strengthening the case for the Reserve Bank to slow down on its aggressive increases in interest rates in the run-up to Christmas. Unemployment rose for the first time since interest rates hikes began during the election campaign. Since May, the Reserve Bank has lifted interest rates 5 times since a historic low. The unemployment rate rose by 1.1 percentage points to 3.5% in August. According to jobs data from the Australian Bureau of Statistics, still 1.8% lower than what it was at the start of the coronavirus scandemic. Many economists now expect the RBA rate rises to be smaller as the aggressive tightening starts to take effect amid falling property values, poor consumer sentiment, and the stagnating unemployment rate, which is normally the last key economic indicator the Reserve Bank's hikes effect. Independent economist Stephen Koukoulas said that the labour markets were very strong, and there are some hints that unemployment could be reacting to the last few months of rate hikes. The first few months of unemployment growth has slowed. Unemployment rate has stopped falling. It's sort of steady around 3.5%. I can go on and read it all. I'm getting a dry throat from reading so much, but we're seeing wages, job levels drop. Talking about things dropping, this one here is the best and funniest one, right? The morning wrap, the Dow plunges 1,200 points after scorching inflation report. ASX is set to plummet. Just going to get a bit of water. The ASX futures will open 159 points lower, down 2.32%. This is on Wednesday, the 14th, so it's like last week. It's going to be a wild, emotions running high, stay safe, respect risk. Look at the 1994 cycle to understand the current one. Valuations are unlikely to rally until the Fed has gone under tightening under the 2-year yield start falling. Where we got here? I'm going to share this article. It's actually a pretty good article to go and read. It has a lot of stats and figures and charts, and you can see trends. I like seeing data. I don't just like seeing people's opinions written in paper, but when we start looking at certain things that are occurring, right, we can look at equities and the growth, right? We look at this chart here. You can see that in the Y2K, the year 2000, we saw a crash from the .com. We saw a crash here from the GFC. And now we're starting to see a crash here from Corona when it happened in February 2020. And now we're seeing a bigger crash occur here. Right? This is real data that's showing through from the stock market. So I said to everyone a few months ago, wait until we start seeing the stock market crashes, right? That's a liquid market. You may not see it into property. So imagine, here we go, look at this one here. Last week's panic hedging, right? These charts, I pulled out lots of charts last week. That doesn't look right on the end here. Why is it crashing, right? Why are we seeing these inconsistencies? Because there's so many zombie companies in the market. There's so many businesses that are failing. The stock market is one big Ponzi scheme. So imagine when people can't get yields, there's nowhere for them to park their money, their shares have lost 50% of their value, everything's starting to crash. Where could they find a safe haven asset? Before a market starts taking off, generally the first thing to boom is the property market, because people are looking for a safe haven asset that they can get cash flow from. So if you can go and get 5% yield from a property, well then the 5% yield's better than the shares that are losing in value, they're losing their capital, they're not protecting their capital. Interesting times. 1,200 points on the Dow Jones. When the GFC came, the worst day of the GFC, I think it was like 700 points that it fell, right? 700 points in the middle of the GFC, and that was a big tipping point for the GFC to occur back in 2008. We just have a casual day of 1,200 points falling off the Dow Jones. And it's like, oh, anyway, what's happening with sport? Let's put the Queen. It's time we bring the dead Queen out.
We touched on the dead Queen.
We're not going on the dead Queen. Yeah, some things we don't go into, but like, you know, the dead Queen, let's bring her out. Let's divert the news that everyone had said that they want to get all their money back into their institution. So there was a 30-day notice for the Vatican to go and get its money back within the end of the month. There's lots of financial storms that are brewing by the end of this month. And a lot of you guys that are watching would recall that I actually specifically said around October, the end of September, October this year. Do you remember when I said it? When they started moving rates 6 months ago, that is when I said it would start happening. Well, we're heading up to that time. We're seeing articles that say 1,200 points lost in a day. What's going to happen is going to be a fun show to watch. So let's just keep watching what happens in the global economy. On that note, I am losing all my screen here. It keeps coming up with pop-ups. Andrea said here, The Philip Lowe is known as a doctor as he has a PhD in economics. Poor, helpless, and desperate in economics because he's totally fucked.
In
Thanks
economics of all.
in economics. So, on that note, Gemma,
Yes.
tonight we're going to talk about what to do if you bought in a bad investment property, right?
Yes.
And there's lots of people that we see that have screwed themselves up over the years. There's lots of opinions based upon things. And when we started talking about this, you had a few things that you want to cover off in the night. I've seen lots of different portfolios over the year, the good, the bad, the ugly. I've seen people avoid. They look at risk very differently, right? How we look at risk. People would look at risk and say, oh, the market has gone up 5% per year for the last 5 years, so that must make a great investment because it's continuously going up. The way that I would assess it is that the upside is minimal. The downside risk is so great that it could fall very easily, and there's too much risk attached into that deal. That's why I don't get involved in hot markets. At the same token, someone could look at somewhere like some of the areas we play in, like the property you bought today, which was 400 grand, and some have recently sold there for 500 grand, and 5, 6, 7 years ago they were selling before this boom that we saw for 600 grand, 700 grand. People could be sitting there saying, oh, well, why would you want to buy a property that's fallen? But when you analyze the data and you look at it and go, well, idiots paid 600 grand beforehand, I'm buying it for 400. The chance of it going up, you can't build it for 400. The rent's positive cash flow. You've educated yourself on looking at the risk, that the downside risk has been removed, the upside risk is all there, the upside potential is all there. So ascertaining risk, people's mindsets, like I've seen people that have really screwed themselves up over the years. Like some of the things that I've seen are the worst. Probably the worst that I've seen is like between doctors and people that are on high income. They get sold all these things from financial advisors that are like products. They're getting sold off the plan properties. They're getting sold shares, bonds, different types of financial instruments that are made up like that are for tax benefits. The worst that I've seen is like people that were on like 400 grand a year as a miner. They bought a property for $2 million in a mining town. Let's call it South Headland or Gladstone or Chinchilla or something. The property before the boom was worth 300 grand. They bought these brand new properties off the plan. They were renting for $2 grand a week, $1 million purchase price. They bought 5 of them. They were killing it when the mining was great. The markets collapsed. The rents went to $200 a week. They couldn't afford to hold it. They went back to an 80 grand a year job. Now they've got negative cash flow of, X amount of dollars per week. Some people really screw themselves up, and that's important to have a strategy to, protect yourself. And I've always talked about building a recession-proof property portfolio. It's not sexy. It's not flash. The fundamentals are right. The buying at below market value, the upside for capital growth, the strong cash flow. The 2 new ones, buying it below rebuild cost means that you've factored in inflation and the competition to, the pent up demand. If you can buy a property for 200 grand, no one can build a property for 200 grand. So for someone to be a competitor in your market with supply and demand factors is there, and servicing to make sure that there's room for growth.
On that with the mining though, I don't necessarily, I know a lot of people come to me and like, I don't want to do mining, and I totally get it. I understand why. There's some horror stories like that. But I don't think it's necessarily the property that's bad, it's the timing was bad.
I remember people came to me 10 years ago, and like you and the team were going through some of our old clients.
See, this is the problem when you make a mess.
I'm just driving over my thrown off paper. I remember people coming to us going back 10 years ago saying, Nathan, 15 years ago, why would you buy in Mount Druitt? Why would you buy in Western Sydney? It's a shithole. And they might have been correct with their view, right? It may not have been a nice area, but the value was there, the fundamentals were there. People said to me 10 years ago, Nathan, I was literally the only person buying in Southeast Queensland, like as a commercial buyer. We were buying about 50 properties per month from myself, for our community, for our clients, through the buyer's agency. And 50 properties a month, that's like 600 a year. It's like, 10 years, it's like 6,000 properties that would have been bought in the Gold Coast and Brisbane markets. And everyone used to say, Nathan, Gold Coast is bad. It hasn't gone up. right?
Laughing today.
You and your team are going through all our clients and they're pulling out equity from people that they bought for 200, now it's worth 600 and all that. But their opinions, they didn't see, they didn't assess risk, they didn't understand risk, they didn't know how to mitigate risk, they didn't know how to do certain things. So the people that did take it, they factored in that risk. And that's very, very important, especially in a time from reading all that scary news that's out there, because there's lots of fucking idiocracy out there. But how can you minimize that risk along the way? And what sort of things can you do to turn that around? So I'm going to leave it over to you. Do you want me to ask you some of the questions? Or?
That's fine. You covered quite a lot of things there, so I don't want to repeat. I think the main thing that is true is its opinions, massively. I remember when you told me this was the topic, and in, normal fashion, hey, here's the topic, off you go. There was not really much prep. The first thing I asked was, what do you mean by a bad investment? Because I talked to some people who, Gemma, I can't do units. Units don't grow. Or we can't buy, and even mining towns. I've walked into mining towns, and for some people I understand it's scary, and I'd rather them be comfortable, of course, but to some people mining towns are bad investments. To some people CBD is bad. Oh, I can't buy this. I just had the conversation today with someone. I haven't seen any growth. It's the same price as it was 5 years ago or whatever it was. Great. That's great. That's absolutely what we want to see. But to some people, that's a bad investment. There's so many opinions on what's a bad investment. It's insane.
It's funny that, right? Like, because people will be like, oh, Bitcoin, it's the best thing to go and buy, right? And it's like, if you could go back 10 years ago in your life and make a decision, people would be like, oh, I'd buy Bitcoin because it was cheap, right? Imagine you go buy Bitcoin at $1 today, right? People are like, fuck yeah, load me up on that, right? But if it was only worth $1, it's only worth $1. That's what the value is. If you have the ability, like I look at the silver market, right? You know, the like silver and gold, right? We've had lots of conversations about it. And if we look at silver, I think silver's a very good buying, right? Because it hasn't gone up. And it looks like the shittest investment ever. It's cheaper than what it was 10 years ago. It doesn't bring cash flow. It's bad on a lot of fronts. But that's still good value. I look at it and go, fuck, that's a good buy, right? People paid more 10 years ago. People don't look at it that way. They look at it from, it hasn't gone up. It must be bad.
Yeah. It actually was about 12 months, maybe not more than 12 months ago, but I couldn't get this, someone was meant to be a property, they weren't doing it, they would not even entertain it because they'd seen 10 years of decline.
Yeah.
And they were like, that's bad, it's going down, like, it's really bad.
Yeah.
I'm like, but there was no other way for me to explain than I have a traffic light system when I'm training the team that you've got, like, the markets go up and down, right? All markets go up and down. Let's make them quite even. The top half is red. You don't touch it. The bottom quarter, maybe amber will play in that if it's on its way down or on its way up. Or the bottom. That's
amber,
fine.
like your hair?
This is orange. This is not amber. It's not faded.
Okay. I don't know the difference.
So but it's not necessarily the property is bad. It's the time you got in.
Yeah.
Mining. You got in at the top and sold at the bottom. You fucked it. You need to do it the other way around.
Because they didn't control their risk.
Yeah.
They didn't understand their risk. They bought in because they thought it was the right thing to do. They bought on the shininess of it. They bought in on the,
Because at the top of numbers, that's kind of like the result.
They read the news probably.
Probably read the news, yeah. The amount of people that flock to Gold Coast now and everyone's paying 100k over asking price. Great! Happy to, of course, you'd be good, but do you want to buy it now or do you want to get it when it was 200?
Exactly. But people weren't happy to buy it at 200. They want to buy it because it's all gone up and they're seeing it go up and they're like, that's great. It's the best thing to buy. So, So what other things do you see that are, a risk?
Emotions.
Emotions, yeah?
Yeah.
Okay. Explain.
100% emotions. There's a lot of different emotions that everybody has. Fear is a big one. That will always... I don't mind fear if I know what you're scared of.
Yeah.
Tell me what you're actually scared of and I can talk to you about that.
Yeah.
But say, this is a bad investment. No, this is not the right... I can't work with that. I can't give you any fact or data to that. But emotions of, I just, I just like a house and I just like some land to it.
Yeah.
But there's pros and cons to a house, there's pros and cons to a unit.
Yeah.
You have to go in and see in the property.
Yeah.
Some people want to walk through it. They want to see it. Yeah. And they've got nothing in terms of a qualification of a builder. Nothing.
Or an investor.
Even
a real estate agent saying that they know how to be a good investor because they sell real estate or property.
I know, but they also know all the tricks of the trade. So surely
But they think they know everything, right? But
I
they're not
know.
an investor.
100%.
They're just
And I always say to people, you can dress up a property as you probably, to a real estate, you probably have dressed up a shitbox yourself to sell it.
Yeah.
But underneath, there's all these things wrong with it, and vice versa. But wanting to go and see it, they want to make it tangible.
Yeah.
To this day, I haven't gone to
any,
even the one in Sydney. And when I first started the con, I was like, oh, I'm going to do a drive-by. I'm going to be like, I own that.
Probably people are doing drive-by.
There's probably drive-bys happening. I have to get, some kind of protection. But even to this day, I'm just like, no, because then it's real.
Yeah.
I
drove to your first property that you bought. I actually drove all the way.
Oh, did you?
Yeah, I drove there. I've got a video. Didn't I send you a video out the front? I drove past a video.
Oh,
yeah. I did.
The cul-de-sac one.
Yes, the cul-de-sac. The modern half duplex one. Yeah.
Yes.
That one of your clients had said no, and they were scared for some unbeknown reason.
Yep.
And you hung up the phone and I said, you buy it. And you're like, what? And I was like, you buy it, right?
Yeah. There's absolutely no easing into that.
Yeah.
You all get like a nice little phone call and Nathan explaining why it's good and a full email of how it all happens. And this is what I see. I just get a...
Here's the contract, go sign it.
Right.
Yeah. I wasn't ready to buy a property today. Well, now you are. So, yeah.
It's probably the best way.
You bought it for 160, wasn't it?
160.
And comparables now, like 320? Like
320, yeah.
Yeah. Double in 2 years. In the area, people have an opinion by, I don't like it for half a duplex, not the full duplex.
But everyone's got an opinion. This is how it's like when if a client's buying properties and I'm calling them, especially for the first one, these opinions that crawl out of nowhere. I'm like, you didn't tell me that before we went into this. Yeah. But it's like, oh no, we don't do units. I've had people, I don't do houses. I only do seaside. I only do rural. No matter what it is. And I can say it to, if someone's telling me I only want houses, I have to say it to them. You know, I have people that won't buy a house.
Someone just commented in here, like I saw their message come up beforehand, and they bought a property under an airstrip. Right? They bought a property under an airstrip, right? And you're going to laugh here because you had someone that didn't want to buy a property the other day. And literally the property was 100 grand below market, right?
Yeah.
This person bought a property for 200 grand and now it's worth 600, right?
Second.
It's tripled, right? But the opinion of someone said no, they literally missed out 100 grand. I remember having a chat with someone years ago and they're like, oh, I don't want to buy in Campbelltown, right? And it's like just southwestern Sydney. It's like, dude, there's 50 grand there. Like, how'd you earn your last 50K, right? Get the fuck out of your bed. And this is times I would go see the property and sign the contract and literally sent them before DocuSign, before all this. This is like 12 years ago. So it's like the property's worth $1 million now. I paid 242 grand for it, right?
This one you call a dickhead if you don't buy it?
No, this is just like...
Oh, okay, sorry.
Yeah, like basically, I just said, like, I had a good relationship with this client. I said, just get in your fucking car, go down there. Well, how did you make your last 50 grand, right? You don't want to get out of bed. You don't want to hop in your car. You don't want to do this. You're saying no to 50K. And the way I look at it is, what's the property going to do? Like, what's it bringing to the table? Is it bringing you what you need? Cool. If it's bringing what you need, it's what you need. It's not what your emotion needs. So.
The one that I'm doing at the moment, the one that's already in exchange.
Yeah.
I was actually thinking the other day, I said yes with the minimal information on that. You gave me the purchase price, what it rents for, and a comparable in the street.
The cheap one? Or
the 130 one.
Yeah. 130. What's that? 130?
130.
Yeah,
you gave me 3 numbers on a Saturday morning.
Yeah.
Do you think you could do another one? I'm like, oh, probably not, but tell me.
Just buy it.
And it was that you gave me 3 numbers.
Yeah.
And again, I was sat there, I don't get the red carpet treatment that everybody else gets, but
You've got a nice portfolio.
I do have a nice portfolio because I don't look at pictures. I actually look at the pictures when I get a builder and pest report. I don't even look at the pictures beforehand.
Yeah.
And that's it.
I just look at the numbers. It's all about the numbers. Cool. Strategy? People that normally make bad decisions don't have a strategy, like bad investment.
Or they have a strategy.
Yeah. And they sabotage it.
They call it a strategy, but it's just a want. It's an emotional want.
Yeah.
But strategy is always, if a client's deviating from all and they're starting to get a bit emotional, hey, remember, like, this is what the end goal is.
Yeah. We get a kick out of seeing, like, how good did you feel when you saw what that poor bastard paid for the property you bought today? Did you get a kick out of it?
Kind of.
I do.
I know, I don't want to say that. Do you know what I mean? I don't want to be like...
I get a kick out of it. I get a kick out of seeing that someone's paid 600 and I'm paying 400, right? Because I'm like, I know that person was out there. I don't want to know anything about them. I don't care about their situation. They're selling the property via the market, right? But I look at it, I'm like, I know that if someone made that decision beforehand to pay 600 and I'm buying it for 400, I'm going to find another idiot that's going to pay 600 in the future.
But someone's telling that guy that was a bad investment. You've lost money.
Correct. But what made the person buy that? They bought it new, they bought it shiny, wouldn't have had a strategy, right? And they're losing this money now because they did it out of fear. They bought out of emotion because they wanted it to be what they wanted it to be. They bought without a strategy. Now they're selling out of fear.
Yeah.
Right? That property's not a bad property. The badness was that someone paid too much and they're selling it now too cheap. And it's a perfect example. Like literally, how funny is that, right? You were thinking about it today, right? About what we're going to talk about, how we're going to talk about certain bad investments. And the prime example is the property that you bought today. The person, it was the worst investment for that person. They just lost 200 grand. But you're making positive cash flow from day one. You've got depreciation. Comparable sales recently, they've listed it with the wrong agent, selling out of fear, like, oh, interest rates are going to go up, whatever's in their head. And they're selling it to you way too cheap.
You know, I had a moment today where the little like doubt comes in, and I was like, surely that number can't be right. Surely not. And I get that, so like how much like comparables are. And I'm looking at it like that's got to be a typo. And you go and obviously you check. I'm like, oh no, it is. And even to this day, it sounds like really cliched and like I'm really plugging the business here, but there's still things that we do that I'm like, Jesus, that's class.
Yeah.
It's really good, even though it doesn't seem like. Well, I'm not going to blow smoke up your ass anymore, but some things that you do, I'm like, I thought all of the tricks were out, you know?
And the other one that you didn't touch on was like the ego. Like you go from one side of fear.
Are we allowed to talk about that?
Talk about ego, whatever.
Oh, yeah, okay.
Nothing's off limits here.
So, okay, this is a really good topic.
Yeah.
Because what I find, and I wonder if they're watching, I can actually see a comment from a few people that this would relate to, is it's funny, right? And I don't mean to offend anybody, and I have a habit of putting my foot in my mouth quite often, but I mean it in the best intentions. I have people that have no properties telling me how to buy property. I have people that are saying, hey, that's a bad property, it's a bad investment, but I have one and they've said no to the equivalent of $1 million in equity time after time.
But that's their problem, right?
No, but what I'm getting to is, for example, people that truly understand the game.
Yeah.
And I'll call a spade, and people can be quite rude about it, and they can be very egotistical.
Well, if they don't like it, it's not going to change your life, right? It doesn't change
No,
your
that's
life.
fine. Yeah. But what I find is the people that understand numbers, people that understand...
You've got so excited, you've got off the camera.
I get very... And, but the people that understand it, people that are actually truly wealthy, absolute gentlemen and ladies, they get it, they understand. They're a pleasure to work with, and I don't mind people that don't understand it and they need me to hold their hand. Absolutely don't mind that.
I love seeing when they don't get it and they're scared and they have genuine fears, and when you tell them once or twice about things and like, yep, I get it, and where they might be like, you can do 10 and they go, I'll just do one to start off with, and then they do the one and they're really nervous, and then do the second one and they're like, fuck, and then they go, cool, get me another 5, right? It's like seeing the penny drops. Yeah,
and you actually see that growth, but it's the ego, I think, even quiet ego. And it doesn't necessarily have to be, I know what I'm talking about and you don't. It can be, I'm not buying that.
I love when people have told me over the years, oh, that's not a good buy. And it's like, you're telling me it's not a good buy. Like, tell me what your qualifications are. Right? So I've got fucking hundreds of properties. I've got, all these, and you tell me it's not a good investment. I've heard it all before. I've been there. And it's like, Yeah.
And I do find that's a conversation that's quite difficult to have. And I will never go on. Nathan knows what he's talking about.
Yeah.
But there is people that genuinely, they come on board as to get expert advice, and then they don't take it. But I can't force people to.
Exactly. And we're not here to, say, hey, you got to go do something. It's up for people to do it. And the thing that I learned many, many years ago, like at least 10 years ago, was that whatever decision someone makes isn't going to change my life. It's not going to change my life, good or bad.
Well, it might change mine. You make me fucking buy
They
it.
change, but but their life changes, right? Like they're gonna either their decision, right? Like when we send a deal to someone and they buy it and they make 50K in equity, they're saying yes or no to 50K, right? And they don't have to say yes or no to that. They can say no, right? But they're not going to make the 50K. The person that's really going to make the money is the person that really wants to do it, and they're going to push forward. And someone just wrote here, someone just said here, I saw someone saying when the time comes that I can invest, I'll take as many as possible, right?
It's a good mindset.
Huh?
It's a good mindset.
Yeah, exactly. So it's
but it's risk as well. I think people don't understand risk. Fundamental. Okay, so some people I have that they don't understand that all of this is a risk.
Yeah.
They want it to be watertight.
Yeah.
No risk.
Well, they put their money into cash, right? They put their money into cash. They go, I'm going to keep my 100 grand savings because they're risk.
It's pretty to look at.
Well, it's not going to get risk. I'm not going to lose it. No. Well, they have lost it because 2 years ago, the 100 grand would have bought them a lot of shit, and now 100 grand won't buy them anything, right? And that's the risk. People don't identify risk. So people get themselves in bad positions because they have underestimated risk. They've overestimated their ability. They've stretched themselves too thin. They haven't put a buffer in place. They haven't got, contingencies in there.
I think my personal position changed when, just to say it, so fucking what if you put it in a bad investment? Whatever you determine as a bad, if you lose money, and what? It was 100% losing money in the bank. Yeah. 100% losing money in the bank.
Yeah.
If, you have children, you're going to spend a lot of money. If you buy a car, it's going to depreciate.
Yeah.
All these things are definite. If you put it into a property, yes, you might lose money. But if you're buying it at the bottom, my 80K shitbox, which is my little star of the show again, but my 80K, that can't go much further. And if it does...
It can't go down. The car goes down more.
Exactly. But even if it did, if I got a valuation tomorrow and going, sorry, Gemma, it's the roof's blown off and it's worth 50K. Which
if the
roof
blew off it, you'd get the insurance and you'd...
That thing's insured for 400K. I don't know what
you'd pray for the roof to blow off the fucking thing. You'd pray for fucking the twister to come and take the thing away. People get scared of that.
My insurance is enough. I want to get some use out of it. Provided no one's hurt.
Harp.
Cyclone.
Maybe someone will listen to your prayers and the harp will come through and just wipe out the whole place.
Hey, I was looking at flood mapping stuff today.
Yeah.
And it was interesting the way it was labelled of rainfall design. I thought it was an interesting way to describe it.
We don't buy in flood areas, but we look at those things. Rainfall design, do they call it?
It was called a rainfall design, yeah.
Okay.
And I think as well, it's important that I think that with what happened this year, obviously I'm a foreigner and I don't know how often floods happen and stuff all the time, but I think particularly this year was bad and we got smashed a lot. That I think we're finding that even places that are not necessarily flood prone, they have been affected, but not in that the whole house is underwater sort of thing. I think people hear the word flood and absolutely not touching it, but it can just be, I don't know, it could just be the pond in the front.
Yeah. So I remember as a kid, I grew up in an area which has got grew up in an area where it's on the high side of an area up on a hill. And I remember in 1991, it rained so bad, every house lost its roof from golf ball hail falling through it and stuff. Everyone would get tarp roof and all that. And there were bins floating down the street. My mum's house, you have to walk up about, say, 2 car heights, right? To get to the front of the house, and you have to walk up 3 or 4 steps and then you get into the house. They ain't ever going to flood, but the street, the wheelie bins, I remember down the bottom of the street, there was 50 wheelie bins sitting down because they all floated down the street. Everyone's wheelie bin because it was out the night before, flooded. Is that a flood event? It was not. But you don't want to buy anything that's had water ingress in through the property. If it goes through your carpet, goes through that, then you're kind of screwed.
But isn't it in Queensland when there's floods in certain areas, there's crocodiles going down the street?
Sharks. Yeah,
great.
There's sharks, there's crocodiles, they end up in all different places.
I've always wanted to move to Queensland.
Really? You can actually see, there's a place, Cardwell, right? I love Cardwell. I don't know why, but you go out and it's the beach is it's made out of rocks, right?
Like all the beaches in England.
It's all like rocks, and you just go out there and you can see like little things in the water, and you know that it's just swimming. Like I want to go to the IGA a few doors up and throw chickens in there, right, just to see and eat it. But like you can see it. There's parts where I've gone in the sky. What do you call, like a chairlift type thing, like in the
Gondola.
no, you go like the strings and you go on the chairlift, like a chairlift, but with a cabin, right? It's like a skylift, a sky train type thing, right?
Okay, yeah.
There's some of them in Queensland. I remember going through it like 2 years ago, and I was looking down the water, and there's literally the ripples. You can see where the crocodiles are in the water. So yeah.
First thing I learned when I came to Australia is how to be croc-wise.
Really?
Yeah.
They can't run fast on land, so it's the tip of the day, right? You
You
get a
have to
crocodile,
zigzag.
yeah, but they can't run. Like they can only
They
run
can
like
run.
they can run, but they can only run like a couple of meters. So if you run, they can't get you. They'll only run like 4 meters, 3 meters, 4 meters.
Oh, I
They
heard
won't.
different.
They won't run
You
like
have
a
to
kilometer.
do zigzag.
It's not like a
but
snake. It's not like a
one of my
snake.
clients, he'll be able to. He commented before. He
Yeah.
lives.
I saw him. Maybe you
Yes.
can give us some advice.
It's a zigzag, isn't it? And you do like a short zig, a long zag, a short zag, and you have to cut because they're opportunistic. They'll watch what you're doing, and then if they don't get you on the zig, they'll get you on the zag.
I don't know. That sounds like some sort of analogy. I don't zig, I zag. There's some analogy.
Please
there.
don't put
Yeah, I
that
don't
into a.
Yeah, I don't know.
I think one thing people don't realise is that we do portfolio reviews.
Yep.
It's so important to keep track because some things are not designed to be a buy and hold.
Yeah.
Some things will be, hey, buy this, and in a year, 2 years' time, turn the profit and use that as some of the deposits.
I saw someone in the messages beforehand that that started off with the fourth property they bought, and first property it started with like 80K, bought 2 properties. One was like 200, one was like 150, pulled out equity, bought property number 3 and 4. Property number 3 was like 130, revalued for like 200, but then the property number 4 was $59,000, and they used to sell for $600,000. And this person was scared a little bit at the time, I think, from memory, that it went from 600 down to 59 grand. I was like, my ute I bought at the time was 74 grand, getting a 3-bedroom townhouse. And my view for that was just to buy it to increase the cash flow for servicing. But when it got to 500,000 or whatever, sell it, take the profit, and pay down the debt on the first 3 properties and own outright. And the poor bastard that would have bought for 600,000, or the person that would buy it afterwards, they wouldn't have had a plan. They wouldn't have had a strategy. They would have got caught up with some glossy numbers and not looked at all the risk. And it's assessing the risk. If you do have a bad investment, there's certain things you can do, right? If you were the person that sold the property to you today, right, 600 to 400, like, why would they sell it for 200 grand? Like, I would look at it now and go, well, okay, I made a mistake. I bought something wrong. I would have identified what the issue is, and I would have been like, okay, I could double down on it. I can find more opportunities. But that person would probably walk away from buying property investing and go, oh, property investing's too hard. I'm going to buy some shares. I'm going to invest in some crypto or whatever the case may be, and not make moves in property again because of that, which a lot of people do. So
I think we do get a lot of people that have been burnt by making just ever so slightly different, but it's important, I think, you did it, fucked it, move on, we can recover.
I've seen a lot of people that have come to us, and some people just get too fearful and do nothing. So when I say come to us, they probably come to us and they're going, oh yeah, property investing is all too risky and whatever, and they float in and out over a few years, do something, may not do something. But I've seen people that have bought really bad stuff, right? And most people go, fuck it, I'm going to not get involved again. But they've identified where they've gone wrong. They've refined their strategy. They've worked out, okay, this is what I did wrong. Now I can improve my portfolio by not making those mistakes again, and time heals wounds for them.
And we have some as well that have made so many mistakes that they've come to us and gone, do you know what? I had so many opinions. You just tell me what to do and I'll do it. Yeah. They can be quite scary, because imagine if they didn't come to us. Yeah. I do get very nervous about that, but I'm glad that they did come to us.
There's a lot of trust in what we do, and then a lot of responsibility comes off the back of it as well. Yeah. So,
for sure. On the end of that, I think there's a little note there: don't throw good money after bad. I think that's that sounded like one of those cliches that sound like really good to fit in there, but it actually makes a lot of sense. Like, if a property stopped performing, and your strategy was always buy and hold, but it took a downward turn for COVID happened or whatever. I don't know what happened. Something happened. Just don't keep throwing money at it.
Negative gearing properties.
Yeah.
A lot of people don't even realise that they've lost money on their properties. Like someone might buy a property for 400 grand and it goes to 500 grand. They're like, wow, just made 100 grand. Let's say it goes to six. Let's say someone bought it for 400 grand and it goes to 600 grand. If that was negative cash flow at 15 grand a year or $300 a week, that means that over 10 years, you have to make 150K to recoup all the losses that you've had over those years, right? So the negative cash flow is bad. So if you bought it for 400, sell it for 600, it's been negative 15 grand a year. You've lost 150K. 50K for stamp duty, and legal fees and sale fees. You've made nothing, right? So I look at people sometimes when they're selling an asset to us and we're buying the properties from the market. I sit there and think this person's been a surrogate, right? They've carried that asset for 10 years, right? They've carried it from 300 places. That there was a property today that I sent out for 220 grand, that suburb, right? Yeah. That suburb, I'd seen people buy brand new properties for 300 grand, 330 grand, like 10 years ago. And we were picking them up 2 years ago for 150, 200 grand, those sort of levels. And someone literally would have done their arts, right? We're revaluing them. They're 300 grand now, right? They're coming in at that. They're renting out their positive cash flow. But that person did us a favor. They held it for 10 years, giving it and handing over the keys. We're collecting it. Now we're seeing it go up and double in a year.
Yeah.
Yeah. It's just that whatever they've done is wrong.
But I think with those portfolio reviews that we do for our clients are very important, even for people that are coming to us at the beginning, to have a look at what we've started with. There might be something you need to revamp, but it also works the other way. People could be sat on stuff, and I've had people say to me, oh, well, I bought something and it was a bad investment, and actually, hang on, it's not as bad as you actually think. It's done X, Y, and Z. I think people see property, make money, and it's a very linear line. Like, it's just very linear, but it's not. There's so many other things. Yes, okay, that might be costing you, even it costs you $5 a week, and I've had people say, no, if I plug in my number $5, you probably shouldn't be investing if you can't part with $5 a week, but it's going to give you 100K, 100, whatever it is.
There's two deposits for the next two.
Yeah, for sure. But it's not linear.
Yeah. And I think also knowing when to shoot. I'd go say shoot the dog in the head, right?
Please don't.
Yeah.
Why of all of the analogies, why would you have chose that one?
I don't know. There's a dog property. They call it a dog property. You need to let go of it. It's like an injured dog.
I will go as far as a dog box.
Sorry, Gemma.
Moving on.
She loves my analogies, but not all of them.
No.
But if you've got a dog of a property that's underperforming, sometimes people won't let it go either. Like, they'll just hold on to it. They might have a property. Let's say you've got a servicing issue, right? You want to get to 100 grand a year passive income. You've got this property that's negative gearing, it's bleeding you, whatever. And that's the thing that's staying in between you reaching your goals. People won't make that decision to let go of it. It's like, you need to let it go.
Yeah.
Get it off the water. So I'm choosing my words very carefully.
No, I'm thinking of my dog box.
Yeah.
I reckon I'd be emotional about that if I have to let it go. If I was to let it go today, I'd get emotional about it.
What about if the cyclone comes through?
Great. Provided no one died. I don't want to.
Oh, yeah, you don't want that.
I've got a tenant in there.
Yeah, you don't want that happening.
Because I think it's such a. That's my. So what if you bought a bad investment?
Yeah.
Who cares? Like, Jesus.
It's 80K.
It's 80,000. And I think I'd be so I'm so intrigued at what's going to happen.
I reckon something funny is going to happen to it one day. I don't know. Just hold on long enough, something funny will happen.
I think in the 12-month breakdowns that I have, I'll be calling you.
Yeah.
Oh my God. But yeah, and it's interesting. My 161.
Yep.
And I have this with all of my clients. My 161, when you're talking about risks and bad investments and all that stuff, 160, building and pest was great. Everything was fine. Came with the tenant, could up the rent straight away.
I remember the call.
Sell it, get rid of it. I don't want it in my life.
First property. I was like, come on, Gemma.
It was a real, not the problems, because I think as well, people expect everything to be smooth sailing.
Yeah.
Sorry to burst your bubble. It's not going to be. You're going to have a problem with every single property, but that's the point.
It's all rented now. The time that you had it, it felt like it was a burden on you, right? I remember you going, the tenant's not in there, there's an issue with the balcony.
Yeah, but then the next tenant was a dickhead as well. Yeah. It was just one of those.
How much are you renting for now?
320.
It all seems like a
No,
distant
I
memory.
know, but what I'm saying
I know.
is the one that had it ticked all the boxes, like, this is great, look at the location, I could move into this at some point.
Yeah.
That's my problem child.
Yeah.
And the one that should be not a problem, that should be a problem, is great.
Do you know why? It's a numbers game. It's purely just a numbers game.
What? It's a numbers game that we dumped all of our shit in the garden.
It happens sometimes. Did you
not
get
a numbers
insurance
game.
on it? Did you get insurance on that?
It's fine. I'm not out of pocket. I've claimed bond and whatnot
Good.
anyway. But
Minimising
it
risk.
was just one of those. I was unlucky with tenants, and I've had people come to me. I need to sell this property. It's shit. It's not doing right. Why?
Yeah.
And you actually go through it. It's the tenants.
Yeah.
So is it the tenants that are the wrong fit, or is the property bad?
Well, it's the tenants that are wrong. It's managing that. It's managing your mindset on it. I can sit here. I remember going back in business many years ago, and I was like, "Fuck staff, man!" Like you see, like just general day to day. I've got issues that go wrong, whatever goes wrong, and there are hundreds of staff. And then it's not that the staffing; it's the processes, it's the systems, it's the management, it's how you handle that. And you need to level up to become a better version of yourself, to become the person that can deal with that.
Yeah.
Yeah. But I see, like, you haven't seen like a lot of the bad stuff because like we're on this side of helping people, right? But the bad, like, think about every deal that we buy, like 70% of them, we're paying less than what someone paid. Those people are getting burned, not because of us. We're just the one helping them.
Yeah.
They're selling it to the market. We're buying it cheap. And a lot of people will have decisions that they've made. They're emotionally attached. I spoke to a client. I don't know who is the client. It was a $1.5 million property. They bought it 2 years ago. It's worth $2 million, something like that. They think it's the greatest property because it's in a great area, renting for like $600-700 a week. And I'm like, this thing's so negative, right? What's your goal? I want to get to 300 grand a year. Okay, I'll get you to 300 grand a year. You've got the capital, you've got the equity, you've got so much equity, but you can't service. That property is holding you back. Your emotion that thought that was the best property that you could have has hurt you. You need to let it go. You've made some money. Okay, cool. There's 4 deposits, 5 deposits, 10 deposits. You can go buy a block of units, just made 500 grand, 400 grand. That's good. It's done its purpose. Use that to get you to where you want to be. But people don't acknowledge it, and then they'll hold on to shit that's wrong. So.
But do you not think maybe, let's say for example, what can I look at? You bought something and you spent a laptop and you spent $5,000 on it. I don't know how much your laptop.
I paid $7 grand. Actually,
oh right, okay, let's go 10. Maybe let's go 20.
Yeah.
That's a bit ridiculous.
That's a bit expensive.
Right,
yeah.
but anyway,
well,
my point will prevail.
Yeah.
So if the laptop's 20k, right?
Yep.
But my laptop out there was 5k.
Yeah.
That runs like an absolute sack of shit.
Yeah.
But it costs you 20 grand. Most people need to persevere. It costs 20 grand. I got to get my value out of it.
Yeah.
I think, yeah, not throwing good money after bad. Like, if it's not doing its job.
Yeah.
I like buying cheap little stuff because if it breaks, I couldn't give a shit. Yeah. It was like $5 for a charger.
It's right out. Yeah.
But if you pay more for it and then it doesn't work, it hurts more.
Yeah.
So when we're buying properties that are like, hey, this is a nice little bow, isn't it? When we buy properties at like 100, 150.
Yeah.
Again, if it doesn't work, you haven't put $1 million into an asset and then it went the wrong way.
And you've minimised the risk along the way. People there's the other thing as well. How many people think that a 100 grand property won't double, triple? Oh,
so many people.
Crazy. Their opinions cost the money.
But also, I think it's very important on those properties. We're buying them cheap, and some of them it's cheap because they don't know what they've got, or it's a distressed sale, or what they don't know what they're selling. Fear, whatever reason. But I think people also give up a bit too easy sometimes.
Yeah.
I have some clients that God love them.
Yeah.
They stay in there, tooth and nail. They will fight for it because they see the long-term value.
Yeah. But
then have some clients that, let's go the complete opposites. The paint's chipped. Yeah. We've got to get 10k. You're not getting 10k off a new paint. It's just not going to happen. Yeah. It has to be realistic. I try and be very realistic of everybody that if it's going to cost a lot of money to fix it, we'll try. But I'll be very honest, we're still happy to proceed because of long-term whatever. Yeah. So I think it's not always going to be peachy, and that's relevant. Doesn't mean it's a bad investment.
Have we got any other topics that you want to discuss? Or?
I don't know. Do you think there is some?
I don't know. I know that you've got some deals.
I have some deals that I think would be good to, because again, we can talk about these good investments, bad investments, but I think it's timing.
Actually, I had one of your clients that bought a block of land, right? They paid 10 grand for it. Shitbox, right? There's nothing in the suburb under 70k.
It's insane.
10k, like literally when you first started.
I guess that's near when I first started.
Yeah, and you told me it was bullshit. You could buy stuff like that.
But will you let that go? Jesus.
Yeah.
But yes, I think it was like 9,900.
Yeah.
Or something like that.
It was the same price. I adjusted the fee
We
to be the
reduced
same
the
price
fee, yeah.
because it had to be the same price. It was like I can't charge more for the fee than we can for the property.
the actual asset, yeah.
But that thing's gone up 7 times.
And that other land?
700%. Which one?
The other land?
Which one?
It was like 24,000 that you have as well.
Oh, yes. 150k.
Yeah.
Yeah. I'm going to sell mine soon.
Yeah, so I think that's important that you're doing it, we're doing it.
Yeah.
So you'll go in first. So the plan with that is we purchase them for what, 23, 24k?
Yeah, about 20k. Some were 18 grand, some were 24 grand, depending on the size. It was an estate. They used to sell the house and land package for 500 grand. House and land was selling for like 220 grand because the market crashed. The land was, 20 grand. No one wanted it. There's no land available now. Market's picking up. 150k, same estate.
And the amount of people that said no because it was a bad investment.
Well, said no to making, they wanted Bitcoin and they couldn't afford it, and now they could have bought land and they could have.
I remember when I called my client, I was like, hey, it's been a while, but I just thought I'd touch base. Do you remember that land you bought?
Yeah.
That you didn't really know why you were buying it? Well,
yeah.
It's now worth X,
What did they say?
150. Oh, all right, great.
Selling it?
Yeah, so they're going to wait for you to do yours first.
But literally, like, someone might have 20 grand, can't service. They could buy a block of land for 20 grand. That thing goes up and does something crazy because it's done it beforehand. And then they could sell it. And then with the profit, take that 100 grand profit, go and buy himself 2 deposits to buy 2 more properties. So.
But even if that took 5 years to do, that was a quick turnaround.
Yeah.
What, 2 years, 18 months?
18 months, yeah.
Even if it took 5 to 10 years, and I know some people want that instant gratification, the quick turnaround, but you park 20k in a property, waited 5 years, and you made, even if it goes up to 200.
Yeah.
Do the 150, you made 100k in 2 years by doing nothing. It just sat there.
500% return because you would have got.
There's no bad tenants, no one dumping the shit. Well, there might be, but.
There might be, yeah.
There might be, but it's.
But it's the opportunities. So you had someone buy a block of units that were in close proximity to Sydney in the Hunter Valley.
625.
625k for a block of 4 units.
So what's that? What's the maths?
130 grand a piece. 160k a piece, roughly. Yeah. 157 and a half or something. And that would be in 18 months, 12 months.
It must be, because it's not. It's
not that long. That property has gone up to, like, you can't get under really 250, 300 a piece.
In that area,
yeah. I know that I sent it to about 8 people and 9 people, and one person bought it.
I should call those. Call those people.
You should call them all.
I get a bit cocky like that. Not cocky, like, depends on who it is. I'm like, hey, do you remember when you said no and you told me you know better?
But it's important to identify that. There's a part of you being their coach and guiding them and nurturing them, is to identify it. If no coach in the history of being a coach would go, oh, okay, yeah, you feel tired today, go and sit down for the next few hours. Like, no, fucking come on, you got to hurry up. You need to lift more weight. You need to do whatever. Like, you're guiding them. So it's important. That thing's renting for like $1,300 a week now. It's like 10% yield, close to Sydney. Positive cash flow.
That's people that you can't get 10% in Sydney.
You can't do that.
You can't do that.
Oh, but buying an hour out of Sydney, 2 hours out of Sydney, that's shit. It's not a good investment. It's not in Sydney. That's what people said. Because otherwise 10 people would have bought it, not one. They would have went jumping.
It's insane. When you actually think about reasons. So join okay, did so-and-so do that deal? No, why? And you have to, I almost feel a bit embarrassed sometimes. They're like, no, they don't think units grow or whatever. And you kind of look at me as if to say, did you tell them? I'm like, yes, I did. There's only so much I can tell.
Yeah.
But
you had another investor that had one in the Gold Coast, 242k, fully renovated, renting for like, it was worth about 280 or something at the time when we bought it. So it was like 20% below. Looking at other properties, there's nothing under 500 for sale in that suburb. But we saw one that sold just recently for 470 in the same complex. It's almost double the price in 18 months or whatever.
These are quite quick turnarounds.
Yeah.
It's again, I feel like I'm surprised by that when I do it all day, every day, but it's not until you actually sit and you reflect.
Yeah.
That's actually not that.
Yeah. These people haven't gone and renovated. They haven't gone and, you know, seen the property. They're just
they live in different states.
Yeah.
Yeah, they live in New South Wales.
Yeah. Any others that you can think of at the moment? That we have the little notes down. There was some notes that put down. Any others that come to mind, or there's lots of them. That's
the thing. There's so many cool things that happen.
Yeah.
And to hold my hands up once it's done.
Yeah.
And the cool things happened.
Yeah.
I almost get like addicted to the next one. Okay, now what we're going to see.
Yeah.
So it's like, yes, you revalued that. And so many people are coming back and saying, right, I pulled 70k, 80k, 100k, 150k. I think I heard someone the other day, they're pulling up, I think altogether in the whole portfolio is around 800k.
Yeah.
But that's obviously, it's quite large.
Yeah.
But people are not saying, oh, it's only gone up by 10, 20k.
Yeah.
Yes, but if you put that in a portfolio of 10, you pull all of it together.
You got 5 properties, they all go up by 20k, there's 100k, but that's this year. Next year they go up another 100k.
Yeah.
Next year they go up another 100k. That's where your deposits come. That's your strategy. So
yeah.
I think most people screw up and get bad investments because they've got a bad strategy. They haven't got a strategy. They haven't got clarity. So
yeah, I'm very much I always look at the numbers at the time, get whatever's done, but I'm very much I do very much focus on the people. Yeah. It's not, okay, so you can sit here and go, that person did this one here, that one there, did this, did that, bought for this, and you can rattle off the portfolio.
Yeah.
But I spent hours calming people down sometimes, and that's what I remember. Yeah. I remember their growth, and everyone comes with an opinion. Everyone's got one. Some people have been burnt, some people haven't. But as long as they're willing to learn, they're more than happy to come on board as a client and we'll take you through it. If you have to say no, but you can give me a good reason why you say no. Mm-hmm. Today, okay, I see better value somewhere else, whatever.
Yeah.
Give me a valid reason. I still think you're wrong, but give me a valid reason.
A lot of people don't. It's the monkey on their shoulder.
Yeah.
Which
that's my favourite one. Okay. Something just doesn't feel right.
Because I've never made that much cash
What do you
before.
mean? Exactly. It just my God, and I get it, follow your gut. I'm quite hippy dippy like that as well, but sometimes you have to ignore your gut because your gut has got you where so far.
Yeah.
You've not.
Yeah. I've got some questions here. Let's go through, say, a half dozen questions and we'll call it a night. So we've got here, your face is really big in there, I think, Gemma. There we go.
Hey, my fans want to see me.
Okay, great. That's good. Gemma is a star.
Yay!
Here we go. 10 rainbow paddle platter for $4.49, cheaper than one paddle pop in the servo. Bargain. I actually went to the servo yesterday and after paying $300 for petrol for my truck,
ridiculous.
$300.
Sick,
I literally put the thing in, I put the cap in and I filmed it. So it looked like a poker machine going off. It was like,
and the ones that go really slow are really drag it out.
I got paddle pop and I was looking at paddle pop and I was like, I should try and be a bit healthier and stuff. I'm not going to get the paddle pop. I looked at it and it was like fucking $4 for a paddle pop. I'm like, wow, it's crazy.
But if you notice with petrol now, when you see one, me and my Pat say this all the time, and it's like, when you see one at 150, that's not bad.
Yeah.
That's still shit. It's still more than what it was.
Yeah, true. I
don't know what it was 12 months ago.
I don't know. I don't look at the petrol. People say to me, Nathan, how much does it cost to fill your truck? I've got 2 of the new cars that came out, and the truck, it's like a Chevy Silverado. It's like a massive truck. And people go, how much is the petrol? I don't fucking know. I paid the money for the truck. I don't look at the petrol, but you look at it and it's like, wow, yeah. I looked at it. I filled it up for the first time fully, and I was like, yeah, wow. I didn't think about this. I didn't think about that. Yeah, use that for towing the big caravan. So, but Kane said here, today's ABC article, why is Australia's financial crimes watchdog investigating the Perth Mint? Is there a chance the Mint is passing off the same asset numbers to multiple investors from USA or even the government's? Interesting. So there was a news article came out where they're now investigating people that have bought gold and silver from the Perth Mint. So the importance of being able to have, discreet, like keeping your notes, like when you're buying anything online, if you're buying more than 10 grand of something from a dealer, it gets flagged by Austrac for terrorism or whatever the case may be. So now they're investigating all the people that have spent a certain amount of money at the Perth Mint, which is the largest mint in the world. 10% of the gold that's created and minted in a year goes through the Perth Mint refinery, so it's pretty big place. But the same thing would occur with like crypto exchanges as well. So yeah, interesting thing. Am I doing a webinar this week? Not this week, but we will be doing a webinar first week of October. Justin said, great to put a face to a name. Hope you're doing well, Justin.
I'll stalk him later. I don't know quite his idea. I know what it looks like.
Okay.
It's okay. We'll just...
Andrew says, first Wednesday of every month, generally, Kane. Yep. Livia says, bye, never stop building. Exactly. Sometimes big numbers scare people off. Nate said, real buying opportunities are starting to show up in the capitals at prices I haven't seen for close to 10 years. Exactly. There's opportunities out there. Rat's tail flash. It's pretty bad today. It's all out of its thing, but it's getting long. It's getting plaited. I need to get it.
Do you wash it?
I wash it every day, but just because it's been plaited lately, I don't like pulling the plait out until it falls apart. So yeah, but I need to do it. Your problem child property, I've got a goal for getting rid of it. I'll probably get rid of it in a couple of months, but just it's been fun watching it grow. Your problem child property would be the one that you appreciate the most. Exactly.
It's true.
Chris, what are your thoughts on buying to rent on short stay market? I do not have any Airbnb properties. I do not see there's too much risk that's associated with that. Your insurance issues, the bank will not take that as income. So a lot of people think I can make a lot of money from Airbnb or whatever, but the bank doesn't take that income as rental income. So your servicing goes down the drain from that perspective. Thirdly, I invest into motels. I've got like 30 motels and pubs. I don't buy them because I want to get short-term stay. The upkeep of staff, management of it all is too much from a management perspective. I buy them because I want to buy the asset, control the asset. So I manage them as a side thing, but I wouldn't be doing properties for short-term stays. How many of our clients do I suggest that to, Gemma?
What, buying hotels?
No, buying short-term stay.
I've
never heard because we don't do it. What are your thoughts on the Queensland stamp duty proposal? I think it's just another communist thing that the system is putting in place. Looking at stamp duty, the land tax, sorry, you're talking about land tax there. Basically, I've covered on this a little bit. I'll do a full video on this. Can you make a little note for Carolyn to do a video on this week? But basically, in Queensland, there's a double stamp duty issue coming out. So a lot of people are fearful that there'll be double land tax. So they'll be charged land tax on properties that they hold in New South Wales or Perth or Melbourne or wherever the case may be. Basically, in each state, you have a land tax-free threshold. In Queensland, it's about $600,000 for an individual and $350,000 in a trust. From my take on it, my reading of the Queensland website, the government website, that basically that whatever land that you've got in another state will help build towards that and push the value of the land up to get you to that land tax threshold. So you'll be forced to pay land tax on the properties that you own. So you're not paying it on properties that you don't own in Queensland, but you'll be forced to pay a higher land tax on the properties that you do own in Queensland. There are ways around this. I will be getting Ridwan on to discuss this from One Path Accountants as well. But when I'm buying an asset, if we look at Gemma's shitbox one that she's got for $80,000, the land content might be valued at 20 grand. So 20 grand from the Government General's office, the Land Value Office, you might sell the land for $100,000 for that property, but the government values it at like $20,000. So it comes up as the UCV, which is the unimproved land value, whatever that is. That 20 grand, if you had to pay land tax on that at 1.5%, it'll be like $300. If you've got a unit in a unit complex, the land value may not be that high. The people that it will really hurt are those people that go, I must have all of land, and they focus on getting land but not cash flow. So if you've got the rents, most people are just going to pass on these added expenses, which will be good, and they may not stay forever. They may stay forever, who knows? But that will end up getting pushed onto the end user. But then the people that have just got massive land holdings will be shaken down and forced to sell, basically. So be very careful and diligent when buying assets, is my viewpoint. Jane said, made my day chatting with you this morning, Gemma. So, yeah.
And you, Jane, it was actually nice to actually. Do you meet people when you answer the phone? Like, what do you call it?
What?
Like when you actually. So I've only ever like heard of her. She's sent a message to Wayne about me.
Yeah.
But I answered the phone, so I actually officially spoke. Is that a meeting?
Greeting? Maybe a greeting?
Nice to finally greet you.
I don't know.
Yeah.
No. Virtually meet you. I don't know.
Nice to speak to you, Jane.
Good to speak to you. There you go. Good to chat. We had a chat. We had a chatting meeting. Anyway, on that note, thanks a lot for everyone for watching and tuning in this evening. Hopefully, you've got some tips and guidance from Gemma. And if you do want to work out where you are with your portfolio, want to plan for the next steps of what you should be doing, work out how to get into the 0.001 of Australians that have 6 or more properties in their portfolio. There's a link in the description to book in a discovery session with Gemma, to have a chat with her, work out where you are, what you're trying to do, and plan your portfolio. It could just be something you could be, just refining what you're doing. I remember reading a book, and this is a book about that. I never read books, but this was I was like 20 years old or 18 years old. Someone gave me this book. It was the Jim's mowing guy, right? And I remember reading something in there, and he said when he first started his business that he worked out how to stack his bag of grass clippings, right? And it was something like he could do 8 lawns a day instead of doing 6 lawns because he didn't have to go and dump all the grass and stuff. So for him stacking his grass clippings correctly, he could get an extra 20% or 25% in his day.
Yep.
So doing an extra 2 lawns over 6 lawns over a period of 5 days is an extra 20 lawns a week or 10 lawns a week, whatever it is. And that helped him improve the profitability of his business, right? And a lot of people aren't looking at what they've got in front of them, which is their portfolio. They might have organized chaos, and they may not be looking at, okay, how can I refine what I'm doing to be able to get more out of my portfolio? So if you have got a portfolio, reach out to Gemma. If you haven't got a portfolio and you want to get one, reach out to Gemma. If you have any questions, reach out to the office. You can click in the link that's in the description, or give us a call, 1300 367 925. On that note, guys, we'll catch up shortly, and thanks a lot for tuning in this Tuesday night. Bye for now.